Hello everybody, my name is Nicole Elliott and I'm a technical analyst and private investor. And today I thought I'd look at crude oil prices. The reason being that they've been in the news quite a bit. You know, they've gone up, they've gone down, the prices, and it's because of this absolute leviathan that's trapped in the Suez canal. I mean, what a whopper. It's hard to imagine that vehicles this large can be made. But anyway, let's take it from three different angles. So my first chart is a monthly chart of the price of US gasoline futures. This is dollars and cents per gallon. And you can see that we've rallied very strongly from a low in March 2020. We had a period of consolidation around the $1.20 level. And now over the last 5 months, we've been scurrying higher at a tremendous pace. But I think we probably stopped and we're going to be capped at that $2.20 level. So, you know, these are relatively big moves here we're talking about, yeah? And the reason for that is that I think we're going to have a shooting star, doji style candle on the month. Obviously, we've got a few more days to go until the end of the month. But I think the combination of this scurrying higher and then a whole series of resistance levels at 220 that have held for most of the last 6+ years, plus the downtrend line, plus the Fibonacci retracement, all of that means I very much doubt we'll get above $2.50, regardless of the summer driving season and what it's got to bring for us. My second chart is a weekly chart now of the New York crude oil price. And you can see that low when it actually went negative. It's just another example of how some of the markets are becoming so unstable. You've really got to think carefully. This one is a different pattern, but we've got over the first 3 weeks in the month of March, we've got what they call an evening star. It's a 3-candle pattern where you go up a bit, quite a good bit, and then you have a doji candle in the middle, indecision, and then on the third week, you reverse week 1, okay? So that's what we've got. We've also got this thing slipping below immediate trend line support, slipping below the 50-day moving average. And all of this topping activity has taken place at the 50% retracement resistance level and a whopping trendline resistance taken from the record high in 2008, where, can you believe it, we were trading at $147.27. So, you know, at $59, $60, it's not expensive, but it's not going anywhere. So we can forget that one. My third chart, my final one, I thought this is a really good way to see things at a different angle. It's again a weekly chart, but this is crude oil as traded on the Shanghai International Energy Exchange. It was first listed in 2018, so we don't have nearly as much history here. And it's priced as yuan per barrel. And you can see that the first 3 weeks of March, we retreated from trendline resistance from the 2018's record high for this contract, from 61% Fibonacci retracement resistance. We've got a variation of the theme on the evening star, where the third candle engulfs the first one completely, the body of it. And now we're just slipping below immediate trendline support. So this one backs up the ideas of NYMEX crude. It's not expensive again, but I do think this one will drift lower with or without this trapped leviathan being released into the sea. Good luck, everybody, and I hope to see you next week in good form.